Welcome to the podcast, ES Midweek Update, your Wednesday appointment for cyclical and volume analysis on ES, the S&P 500 mini futures contract. I am Ryan Cooper, a financial journalist, and we are joined by expert analyst and trader Clara Bennett from Cyclical. Please note that the views presented in this podcast are generated by AI NotebookLM, that analyses and reprocesses are pre-market live sessions from the YouTube channel Cyclical, and therefore could contain errors. All references to price levels or market analysis are not to be considered financial advice. The aim of this podcast is to analyze market dynamics and provide a midweek update.
All right, so let's jump right into it. A midweek ES market analysis with Clara Bennett from Cyclical.
Sounds good.
Break down what these cycles are saying, and we've got some pre-market data as well. So
Absolutely, we do. We've got 3 sessions worth.
3 sessions, wow. All right, well, a lot of our listeners I know are familiar with cyclical analysis, but for anyone who's maybe a little newer to it, can you just give us real quick, how you use these cycles to see where the market might be headed?
Sure. So cyclical analysis is all about identifying repeating patterns in market behavior. And, we use these cycles to anticipate potential turning points, areas where the market might find support or hit resistance, and also just get a sense of the overall bias, whether the market is leaning more, bullish or bearish.
So it's not about predicting the future or anything like that, but just kind of seeing the possibilities.
Exactly. It's all about probabilities. And, we don't just rely on cycles. We also combine that with other tools like volume profile and depth of market analysis to get a more complete picture of what's happening.
Yeah, I was going to say, speaking of things that can influence the market, we do have NVIDIA's earnings report coming out after the market closes today, February 26th.
Mm-hmm.
So how do you think that might impact the ES, especially, given NVIDIA's role in the tech sector?
Well, I'm anticipating a positive report from NVIDIA. I think that this could energize the tech sector and, by extension, the S&P 500.
Mm-hmm.
And, keep an eye out for a potential breakout or at least a strong upward move, particularly in the last half hour of trading.
Okay.
And, it could even spill over into the after hours market.
Interesting. So potentially good news for anyone holding ES long positions, but I imagine we need to consider other factors as well.
Always.
Yeah.
Yes, we also had the consumer confidence report yesterday, but I don't think it will significantly impact the overall market sentiment, especially if NVIDIA's earnings are strong.
Got it. Context is key.
Yeah.
All right, well, let's zoom out a little bit and let's take a look at the ES daily chart. What are you seeing there, particularly, in relation to the quarterly cycle?
Yeah, so we're approaching the yearly value area high, or VAP, on the daily chart.
Okay.
You can think of the VAP as the price level where most of the trading activity happened over the past year.
Okay.
And we're also, we're in the territory of that large volume candle from January 15th, which, is a pretty significant level. But
okay, I sense a but coming.
Well, a potential short setup is forming as the quarterly trend line is crossing below the semi-annual one. And this kind of crossover suggests that we might see a move to the downside, even with a potential boost from NVIDIA.
So we have this potential bullish news and then this bearish cyclical setup. It's kind of a tug of war here.
Mm-hmm.
What about, we talked about the quarterly cycle. What about if we go down to the 16-day cycle? You mentioned yesterday a break above the downtrend line. Does that change anything?
Yeah, breaking above that downtrend line yesterday does hint at a possible shift to a more bullish bias in the short term. And considering that we had a significant price drop recently, breaking below some key levels like the quarterly VAP, it's likely that we've already, put in the low for the monthly cycle.
Okay, so we have a couple bullish signals there, but still within this potentially larger bearish picture. Where do you see, what are your thoughts on where the ES might be headed in terms of price targets?
Yeah, so I'm kind of focusing on the area between the quarterly VAP and the monthly VAP as a possible target zone.
Mm-hmm.
It's a range where I think the price could kind of bounce around.
Okay.
Also, watch for a P formation in the volume profile today. It's a pattern that often pops up when buyers jump in after a sell-off. And it kind of indicates the bulls are kind of wrestling for control.
Interesting. So potential buyers stepping in, but still that looming, quarterly trend line crossover hinting at a possible downward move. So it sounds like today could be a big day for the ES. All right. Well, let's zoom in a little bit further. What's happening in pre-market trading today, and what are some potential entry strategies that our listeners could be thinking about?
Okay, so today's pre-market setup is particularly interesting. And, if we see a V pattern,
Right.
that's a bullish price and volume pattern. It could be a good opportunity to go long.
So when you say V pattern, what specifically are you looking for to confirm that?
Yeah, so I would want to see the price kind of drop initially, creating the left side of the V,
Yeah.
and then, a surge in buying volume kind of pushes the price back up, forming that right side of the
There's a
V.
drop and then a bounce back with, strong volume.
Yeah, exactly.
Okay, got it. Now, if you were to actually enter a trade based on that V setup, where would you put your entry, stop loss, and profit target?
So, based on the current pre-market action, my preferred entry point would be around 6,005.
Okay.
And I would place a stop loss order at 5,995 to manage the risk. And my profit target would be 60.35.
Okay, so a pretty decent risk reward setup there.
Yeah, exactly.
Enter at 6,005, stop at 5,995, target at 60.35.
Yeah.
But, what if someone is thinking about a short setup? What would they need to see for that?
Yeah, so for a short entry, I would need to see the price definitively break below yesterday's low, which is around 5,985.
Okay.
And, if we rally up to retest those high volume nodes,
Okay.
think of those as price magnets around that 60/20, 60/30 area,
Okay.
and then show weakness, that could be a good short entry point.
So we really need that confirmation from price action, even if there's a potential bearish bias in the cycles.
Absolutely no trade without confirmation.
I like that. Now, you mentioned volume a couple times there. Could you explain those high volume nodes a little bit more, like how you use them in your analysis?
Sure. So think of high volume nodes as like footprints in the sand. They're showing us where the most trading action happens in the past.
Okay.
And, which often acts as like a magnet
Okay.
for future price movements.
Hmm.
And, these nodes, especially the ones that are formed in recent trading sessions, they can act as support or resistance levels.
So it's not just about the price levels themselves, but it's about how much activity was happening at those levels. Like the more footprints, the stronger the magnet?
That's a great way to put it.
Okay, great.
Okay.
And by looking at both, the multi-day and the intraday volume profiles, you can kind of get a clearer picture of where the market might be headed.
Exactly.
Okay, perfect. Now let's talk about the depth of market, or DOM.
Yes.
For our listeners, this can be really insightful for, real-time trading, seeing what's happening right now.
Absolutely.
What can you tell us about the DOM and, how are you reading it today?
Sure. So the DOM is basically like having a real-time window into the order book, letting us see the buy and sell orders flowing in.
Okay.
And, it kind of helps us understand the balance of power between buyers and sellers. And it gives us a sense of the market's immediate intentions, right? Like, what is it trying to do right now?
Now, you mentioned some key volume levels from the previous sessions,
Yeah.
February 24th and 25th. How are those levels potentially influencing today's trading?
Yeah, so from the 24th, we had a significant volume level form around 6032. And, this was where buyers stepped in after a pretty sharp drop. So it's suggesting that, it could act as a support level.
Okay.
And then on the 25th, another key volume level kind of emerged around 6045, and that's where sellers took control. And so, that level might act as resistance if the market tries to move higher.
So we're kind of watching 6032 as potential support, 6045 as potential resistance, almost like, markers from previous battles.
Right.
They can kind of guide us in today's trading. Okay, perfect. Now let's break it down even further. How do you actually analyze the DOM? Like, walk us through how you look at the buy and sell volumes, the delta, the spread, all of that to kind of anticipate those short-term price moves.
Right. Well, right now the DOM is showing a mixed picture. We're seeing pockets of both buy and sell volume with the delta, which measures the difference between buy and sell orders, kind of fluctuating. So it's not really giving us a clear directional bias just yet.
So the market's still trying to figure out which way to go, kind of like a coin toss at this point.
Exactly. And the spread, the difference between the bid and ask prices is also relatively tight, which suggests some indecision in the market. It's those wider spreads that usually signal stronger directional moves.
So a tight spread means we're in wait and see mode. But if that spread starts to widen, that could be signaling a potential breakout.
Precisely. But remember, the DOM is just one piece of the puzzle. We always need to consider it in conjunction with price action, cyclical analysis, and other indicators to really make informed decisions.
It's all about getting that 360-degree view of the market. Okay, cool. Now, we've covered a lot of ground, cyclical analysis, volume profiles, depth of market, but we haven't really talked too much about the news, particularly the NVIDIA earnings report. Ryan Cooper, our financial journalist, is here to give us some broader perspective. Ryan, thanks for joining us. We've been diving deep into, the technicals of the ES market, but from your perspective, what are some of the key economic and geopolitical factors our listeners should keep in mind as they're kind of navigating these markets?
Well, it's a fascinating time to be watching the markets right now. There's this kind of push and pull between, optimism about a potential soft landing for the economy, but then also worries about persistent inflation. The Fed's next move on interest rates is a big question mark. And then you've got geopolitical risks, like the situation in Ukraine, that are still kind of casting a shadow. So investors are really trying to make sense of all these mixed signals, which is, I think one reason why we're seeing so much volatility.
It's like trying to solve a puzzle with some of the pieces missing.
Exactly. And it's really crucial for investors to stay informed, not just about the technical side of things, but also about those broader economic and geopolitical trends, because these factors can really sway market sentiment and ultimately, price movement.
Absolutely. Knowledge is power, especially in finance. Clara, any thoughts on how these broader macro trends are influencing your cyclical analysis?
Yeah, for sure. Those macro factors can definitely play a role in shaping the longer term cycles. For example, a sudden shift in monetary policy like a rate hike by the Fed could really accelerate a bearish cycle or even trigger a new one. On the flip side, some kind of positive development on the geopolitical front, that could boost market optimism, potentially extending a bullish cycle.
It's like the cycles are influenced by these underlying currents in, the global economy and geopolitics.
That's a great analogy. And the more we understand those currents, the better we can really interpret the market signals.
For sure. For sure. Okay, Ryan, we can't really ignore the elephant in the room.
Well,
Inflation. It's been a constant worry for investors. How do you see inflation potentially impacting the ES market moving forward?
Yeah, inflation is a tricky beast. It eats away at purchasing power, it creates uncertainty, and it can lead to higher interest rates, and all of these things can hurt corporate earnings, which can then put downward pressure on stock prices. So, if inflation stays high, we could see more market volatility and potentially even a correction.
So inflation is like this hidden tax, silently chipping away at returns and potentially throwing the market off course.
Exactly. And it's something that investors need to be aware of, especially if they're in it for the long haul. Inflation can really have a big impact on their portfolios over time.
Definitely something to keep in mind.
Yeah.
Okay, Claire, before we wrap up, any final thoughts on how our listeners can apply these insights, to their own trading?
Yeah, I think the key is to really focus on identifying those key support and resistance levels, as well as potential breakout points using a combination of cyclical analysis and volume profile. And, pay attention to the news, but don't overreact to every headline. It's about understanding the bigger picture. And, most importantly, manage your risk. Don't let emotions drive your decisions. Stick to your plan, protect your capital.
Great advice. Planning, discipline, and understanding the forces at play. Ryan, any final words of wisdom for our listeners?
Yeah, I would just say stay curious, stay informed, and don't be afraid to question your assumptions. The market is constantly changing, and, those who are willing to adapt and learn will be the ones who succeed.
Fantastic advice from both of you.
Mhm.
Ryan, thanks so much for sharing your insights, reminding us about the importance of staying curious. And Clara, as always, thank you for, walking us through these complexities of ES trading and, sharing your expertise.
It's been a pleasure. I always enjoy sharing my passion for the market.
We've talked a lot about the technicals and the fundamentals, but there's another layer we haven't really explored yet, and that's market psychology.
Ah, yes. The human element.
Exactly. Clara, how do you factor in market psychology into your analysis, especially, with ES trading, which is so fast-paced?
Yeah, it really comes down to understanding that herd instinct. Those emotional biases that can lead traders to make, kind of irrational decisions.
Right.
And fear and greed, those are the big ones here. When fear takes hold, we see those panic selling, cascading drops. But then when greed takes over, you get that excessive exuberance, driving prices up to these unsustainable levels.
So it's like the market is driven by these waves of emotion, almost amplifying those swings up and down.
Exactly. And it's often at those emotional extremes,
Okay.
where we actually see the trading signals that we look for.
Okay.
So, for example, when fear peaks, that can actually be a good buying opportunity because the market's getting oversold.
Oh.
Conversely, when greed is rampant, that might be the time to actually sell
Right.
as the market becomes overbought.
So you're kind of looking for those moments when the herd mentality might be leading the market astray, and that's where the opportunity is, especially for like a contrarian trader.
Absolutely. Being able to separate your own emotions from all that noise
Right.
and make those rational decisions, even when, everyone else is panicking or getting overly excited, can be, incredibly rewarding.
It takes mental fortitude.
Yeah.
That's for sure, Ryan. From a journalist perspective, how are you seeing market psychology kind of play out in this current environment?
Well, I mean, there's definitely a lot of nervousness out there.
Yeah.
Investors are really wrestling with, all those conflicting signals we talked about before, inflation, interest rates, geopolitical risks, and it's created this undercurrent of anxiety,
Mm-hmm.
which can lead to, some pretty knee-jerk reactions. And those amplified market swings, we saw that just yesterday with the consumer confidence report.
Mm.
The numbers were slightly below expectations and the market dipped. It wasn't a huge drop or anything,
Right.
but it just shows how sensitive investors are to, any sign of weakness right now.
Like the market's on edge, waiting for the other shoe to drop.
Exactly. And it's not just the big institutions that are driving these swings anymore. Retail investors using trading apps fueled by social media, they're also playing a much bigger role now in kind of shaping market sentiment.
Interesting.
We saw that, during the meme stock frenzy a couple years ago, and we're seeing it now with this increased activity in options trading.
Mm-hmm.
And, these retail investors can be a really powerful force, magnifying, both bullish and bearish moves.
So it's like the playing field's been leveled a little bit, but it's also added this, another layer of unpredictability.
Absolutely. And it's something that traditional analysts and investors are still trying to wrap their heads around. The dynamics are changing, and market psychology is really playing a more prominent role than ever before.
It's fascinating to watch. It's not just about the numbers anymore.
Right.
It's about understanding that human element, like what's driving those buy and sell decisions.
Absolutely. It's that human element that makes the market so, unpredictable, so exciting, so frustrating, and ultimately so rewarding.
So true. Okay, Clara, any final, tips for our listeners on how to navigate these psychological pitfalls of trading, particularly with such a volatile instrument like the ES?
Yeah, I'd say a few things to keep in mind. First, create a trading plan and stick to it. Don't let your emotions lead you astray.
Mm-hmm.
Second, manage your risk.
Mm-hmm.
Use those stop loss orders to protect your capital and avoid making impulsive decisions.
Okay.
Third, take breaks. Step away from the screen, clear your head. It's easy to get caught up in all that market noise and lose perspective.
For sure.
And lastly, remember that trading is a marathon, not a sprint.
Mm-hmm.
Focus on the long game and don't get discouraged by those short-term setbacks.
Excellent advice. Plan, protect, detach, and persevere. Words to live by, not just in trading, but in life in general.
Yeah, definitely.
Ryan, any parting words of wisdom?
I would just reiterate what I said before. Just, stay curious, stay informed, and never stop questioning your assumptions. The market is constantly evolving, and, those who are willing to adapt and learn, they'll be the ones who thrive.
Wonderful advice. Ryan, thank you so much for sharing your insights and reminding us about, the power of perspective and staying curious. And Clara, as always, thank you so much for, guiding us through these complexities of ES trading and, sharing your expertise and helping us to really understand that emotional side of the market.
My pleasure. It's always a joy to share my passion for the market.
And to you, our listener, thank you so much for joining us on this deep dive into the ES market. We've covered a lot of ground, from cyclical analysis and volume profiles to the depth of market and even market psychology. And we hope you've gained some valuable insights that you can apply to your own trading journey. Remember, knowledge is power, but only when it's put into action. So take what you've learned, analyze those markets, make your decisions, and may your trades be profitable. We'll be back with more deep dives, exploring new financial frontiers and uncovering those hidden market signals. Until then, happy trading.
Thank you for listening to the podcast ES Midweek Update. Subscribe to the Cycle Depth channel to stay tuned for the next episodes and leave a comment. We remind you that the opinions expressed in this podcast are generated autonomously by AI NotebookLM, based on our pre-market live sessions of the U.S. market, and therefore, the content might not fully reflect objective market data or the analyses from our live sessions. This podcast is not financial advice. A greeting from your host, Ryan Cooper, and we'll see you next Wednesday.